Welcome to This Explainer. Today, we're taking a deep dive into a genuinely fascinating situation unfolding in the resources sector right now, specifically looking at Greatland Resources' O'Callaghans asset. For years, this was honestly just a secondary thought tucked away in Greatland's gold and copper portfolio. But with the geopolitical map shifting so dramatically and a massive global tungsten squeeze underway, we're going to look at exactly how this deposit is rapidly emerging as a truly critical asset.
To truly wrap our heads around the scale of this opportunity, we really have to look at the market fundamentals. Tungsten prices have jumped 700% since early 2025. That's absolutely wild. We're talking upwards of $3,000 per metric ton unit for APT, which is the benchmark intermediate tungsten product. To put that into perspective, Greatland's own resource estimate was modeled using a super conservative price of just $450. So yeah, the supply and demand fundamentals have completely flipped on their head.
So here's our agenda for mapping out this investment thesis. We'll start with the global tungsten crisis, move into the specifics of the O'Callaghans opportunity, check out the mining and processing feasibility, discuss Greatland's strategic pathways, and wrap up with unlocking investor value.
All right, let's jump right into Section 1, the global tungsten crisis.
We're currently watching a massive structural collision in the global market. On one side of the equation, you have critical Western aerospace and defense needs. Tungsten has this extreme melting point that makes it literally irreplaceable for armor and aerospace components, and that accounts for about 25% of total global demand. But on the flip side, you have severe export controls coming out of China. Historically, China controlled over 80% of global supply, but driven by declining ore grades and frankly strategic maneuvering, China abruptly became a net importer of tungsten in 2025, and that is absolutely starving Western supply chains.
Which brings us directly to Section 2, the O'Callaghans asset opportunity itself.
Geographically speaking, the O'Callaghans deposit is located just 10 kilometers south of Greatland's fully operating Telfer mine. This proximity is a total game changer. It offers massive potential synergies because you don't have to go out and build an entire mining camp from scratch. By potentially sharing Telfer's existing airstrips, villages, and roads, Greatland could save incredible amounts of time and upfront capital expenditure. It's practically right next door.
And when you benchmark O'Callaghans against all other global tungsten deposits outside of China, Russia, and North Korea, it clearly stands out as one of the largest high-grade tungsten deposits available anywhere. We're talking about a highly significant asset sitting right in a Tier 1 mining jurisdiction in Western Australia. It really is a hidden gem.
And the hard data absolutely backs this up. The December 2025 mineral resource estimate delineates a massive 70 million ton resource. But here's the kicker. It's not just tungsten. It's a polymetallic deposit enriched with really valuable copper, zinc, and lead byproduct credits. Plus, over 95% of this resource is in the high confidence indicated category, which is supported by over 71,000 meters of drilling. So this isn't guesswork. This is a highly defined ore body.
Okay, moving to Section 3, mining and processing feasibility. Because a deposit is really only as good as its economics, right?
Geologically, O'Callaghans is highly favorable for modern mining. It's essentially a sub-horizontal layer of polymetallic skarn, which is just a fancy way of saying a hard rock formation heavily altered by mineral-rich fluids. It sits about 300 meters down, gets up to 60 meters thick, and contains both scheelite and wolframite tungsten. The fact that it's relatively flat and thick makes it super predictable and highly conducive to bulk underground mining.
And the project is heavily de-risked already. Why? Because the previous owner, Newcrest, actually completed a detailed pre-feasibility study way back in 2014. They systematically picked out long-haul open stoping as the optimal mining method, using standard truck haulage via a decline, and using paste fill to safely stabilize the mined-out areas. So Greatland is looking at a technically viable, well-understood mining method that's already standard industry practice. No reinventing the wheel here.
Once the ore is actually out of the ground, the processing is equally well mapped. For O'Callaghans, the proposed flow sheet uses sequential flotation to first strip out those valuable base metals, the copper, lead, and zinc. After that's done, it uses magnetic separation and gravity recovery to create a really high-grade tungsten concentrate. That concentrate can then be chemically converted into ammonium paratungstate, or APT, which is the high-purity compound the global market actually trades.
So what's management actually going to do with it? Let's explore that in Section 4, Strategic Pathways for Greatland.
Managing Director Sean Day made the company's position incredibly clear during their March 2026 earnings call. He said, and I quote, "I think truly all options remain on the table, whether that's a partial divestment or a complete divestment, a joint venture, a spin-out. The main takeaway here is that Greatland is in a serious position of power. Thanks to a strong balance sheet bolstered by their gold and copper production at Telfer, they don't have to rush into a bad deal. They can afford to be patient and optimize for maximum long-term shareholder value."
The crucial point is the sheer optionality they possess. While a full or partial divestment, a joint venture with a major player, or a dedicated spinout are all prime considerations right now, management did note that concurrently developing O'Callaghans alongside their massive flagship Havieron project is the least likely scenario. I mean, building two massive mines at once stretches both capital and focus. Therefore, monetizing this asset through a partnership or sale seems highly probable, turning hidden resources into tangible capital.
And finally, Section 5, Unlocking Investor Value. This is the bottom line.
Analysts are pointing out a pretty glaring disconnect in the market right now. There's a huge gap between Greatland's current portfolio valuation, which almost exclusively prices in their gold and copper operations, and the highly elevated market caps of pure-play tungsten producers globally. Because the broader market is just so desperate for tungsten, those pure-play companies are enjoying massive premiums. Meanwhile, Greatland has this world-class asset sitting there, largely unpriced by the broader market. So a spin-out or a divestment serves as a very clear catalyst to unlock that hidden value.
And honestly, the timing couldn't be better. With Western markets taking aggressive legislative action, like the U.S. legally mandating a complete shift away from Chinese and Russian defense tungsten by 2027, the scramble for Tier 1 Western supply is frantic. O'Callaghans is perfectly positioned to capture a massive premium here. It's safe, it's massive, and it's in Australia. End users in the defense and aerospace sectors are going to pay top dollar for that exact kind of supply security. Which leaves us with the ultimate provocative question for investors to monitor closely over the coming quarters. How exactly will Greatland execute on unlocking the immense hidden value of O'Callaghans? Are they going to spin it out to create a brand new tungsten powerhouse? Or will they sell it outright to fund their gold ambitions? Whatever pathway they choose, the global tungsten crisis has absolutely ensured that this hidden giant can no longer be ignored. Thank you for joining me on this explainer, and definitely keep a very close eye on how this fascinating geopolitical and financial puzzle pieces together.